Thank you for joining me. I'm Alex, and I want to talk about Etsy today. So, what they do is e-commerce, and mostly it's small businesses slash people who make custom stuff. Very few big businesses do sell on Etsy, obviously, because most of them have their own websites, but still. Um, actually very well known name in like craft sales and everything. So current price $170, which gives them a market cap of $21 billion. Dividend is zero. I don't expect that to change in any time frame I care about. Revenue $818 million, earnings $96 million, both up significantly. Definitely going in the right direction there, especially for a business this young. PE is 92, which is certainly very high. You would think that the growth of 30-ish% on both revenue and earnings would justify that. Certainly very nice growth there. Not sure if the PE is not still too high though. Total assets $1.5 billion, total liabilities $1.1 billion, both up by $600 million ish, and the total stockholders' equity pretty much even at $407 million. I like this balance sheet, but I definitely liked last year's balance sheet a lot better. Definitely not a bad balance sheet though. Risk factors, pretty much a different site, just up and deciding to do the same thing. So Etsy is kind of sort of shooting themselves in the foot by being a little bit too greedy, in my opinion. So there's certainly room for other websites to come up and kind of steal the thunder here. But overall, Etsy is very well known, and they're certainly going to be around for a while, even if there's another company doing the same thing. So overall, obviously for a dividend investor, there's nothing here. Let's do value investors first, because I think there's a lot to like here, but I think for a value investor, the PE is just going to be way too high. Forward PE estimated at 78, also way too high. If they can keep the growth going, it'll take another 3 years or so to have a decent PE. And so I don't think a value investor is going to find this very attractive. For a growth investor, as I said, with 3 more years to get a decent valuation, I think that this is going to be a fairly interesting company, especially if they can kind of keep the revenue growth going, and there's certainly enough room for growth there. So I think that it's going to be a fairly interesting stock to look into. Definitely no like slam dunk home run, but I do think that growth investors should be looking into this and kind of coming to their own conclusions about the market as a whole, the current pandemic and how that factors in, and the kind of growth they can achieve in the future. But overall, I think it's going to be worthwhile to look into that at the very least. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.